Welcome back to Matrix Millionaire. And listen closely, because what I'm about to show you is going to permanently change the way you think about XRP's price. You've been told for years that XRP can't hit $100 or $500 or anything close to it because of market cap math. You've heard the same tired line over and over. If XRP reaches triple digits, the market cap would be too high, it's impossible. But the truth is, that entire argument is built on a completely incorrect assumption. It assumes XRP behaves like a stock. It assumes price is linear. It assumes the market is rational, transparent, and fairly priced. It's not, and XRP isn't priced the way people think it is. What if I told you XRP is designed to revalue, not rise gradually? What if the current price isn't an honest reflection of value, but the byproduct of how liquidity has been intentionally managed up until now? What if the low price is not a failure, but part of the design? This is not financial advice. This is perspective, information, and a chance for you to understand something most people will only realize after the move has already happened. Because the truth is this, XRP's price is not drifting. It's waiting. It's waiting for a trigger. It's waiting for a specific liquidity event. It's waiting for the moment where supply, access, and institutional demand converge. And when that moment hits, the revaluation won't be gradual. It will be violent, fast, sudden, the type of move that punishes hesitation and rewards conviction. And we finally have real data to prove why. Recently, analysts uncovered something the market had completely overlooked. They tracked the exact amount of money required to move XRP's price by just a few cents, and the result was unbelievable. We're not talking billions, not hundreds of millions. We're talking mere millions. A few $1,000,000 in net inflow caused hundreds of millions of dollars in market cap expansion. That means XRP doesn't move one-to-one with inflows. It amplifies them. This is something most people don't understand. XRP's price doesn't follow traditional market cap math. XRP reacts to liquidity pressure. And liquidity pressure scales exponentially, which means the idea that XRP needs $1 trillion of fresh capital to hit triple-digit levels is not just wrong. It's mathematically false. And here's where it gets even more interesting. While retail has been arguing about 50 cents versus 60 cents, institutions have been accumulating quietly and off-market through over-the-counter channels. Why? To avoid triggering this exact multiplier effect. To avoid showing their hand. To avoid waking up the retail crowd before they're positioned. But that OTC window is closing. Ripple's escrow is finite. And once that supply runs out, institutions will no longer have the privilege of acquiring XRP off-exchange. They will have to enter open markets. And when that happens, the multiplier you're about to see goes nuclear. The question is not if this happens. It is when. And the people who understand why, the ones who actually grasp what XRP is built for, how liquidity scales, and what happens when a global settlement asset enters regulated ETF rails, those are the people positioned on the correct side of history. So now we're going to break it down, simply, clearly, step by step. No hype, no speculation, just mechanics. Because when you see how XRP's price is engineered, you will never look at this market the same way again. Here's where everything starts to click. Because once you understand how XRP reacts to inflows, the entire price conversation shifts from can it hit triple digits to how fast can it get there once demand turns on. So let's break this down clearly. A few analysts in the XRP space recently tracked a real price movement during a live market window. Not theory, not simulation. Roughly $4.7 million in net buying pressure pushed XRP up roughly 5 cents. Just a few $1,000,000. That's nothing in the world of institutional finance. Some funds deploy more than that in a single trade just to test execution. Yet that tiny inflow triggered hundreds of millions of dollars in market cap expansion. This is the part most people have never understood. XRP doesn't scale linearly. It scales by liquidity compression. Most assets have thick order books. You need large amounts of money to move them. XRP does not. The order book is thin because so much XRP supply sits locked, staked, held long-term, or distributed across dormant wallets. What's actually liquid and available for purchase is a tiny fraction of the total supply. So when money enters, it doesn't gently push the price. It jumps levels. Buyers climb the order book. Gaps get filled instantly. Slippage accelerates. That's how a small amount of flow triggers massive upward movement, which means XRP's Market cap math is misleading by design. The market cap number doesn't represent actual capital. It represents the marginal price multiplied across total supply. And when marginal price gaps upward, the market cap follows explosively. This is why saying XRP needs $1 trillion to reach $100 is just wrong. It doesn't. It needs a fraction of that in concentrated inflow during a liquidity pinch. And here's where the story gets even more serious. For years, institutions have been able to dodge this multiplier by acquiring XRP OTC directly from Ripple's escrow, bypassing the public markets entirely. That's how you accumulate without waking retail and without igniting the chart. But that advantage is nearly gone. Every month, Ripple releases escrow. Every month, more of that escrow is allocated, purchased, absorbed, or relocked. The supply that institutions can quietly access is shrinking. Once that escrow supply exhausts, even partially, the only remaining liquidity will be on public exchanges. No more discount accumulation, no more silent positioning, no more hiding. When that day comes, big money will be forced to step into the same liquidity pool as everyone else. And when a fund moves $100 million into an asset that reacts with a 50x to 500x price multiplier, the revaluation isn't gradual. It is instant. This is the moment where XRP stops behaving like a speculative altcoin and starts behaving like a global settlement asset experiencing its first true price discovery event. Not a pump, a repricing, a structural redefinition of value. And the world will be caught off guard, except for the few who understood the mechanics in advance. This is where everything becomes unavoidable. Because once XRP moves from retail speculation into regulated institutional access, the liquidity model changes forever. And that trigger is already forming in the background. The ETF architecture. Right now, Bitcoin and Ethereum are acting as the test assets for Wall Street's onboarding. They're the warm-up, they're the training wheels. But XRP isn't built to be a speculative store of value like Bitcoin. And it isn't built to be a smart contract playground like Ethereum. XRP is built to move money, to settle, to transfer global liquidity between currencies, banks, and ledgers, which means once ETFs create the legal and regulatory pipeline for institutional capital to enter XRP, the asset doesn't just become more accessible, it becomes necessary. Think about this in real-world terms. Cross-border settlement today takes days. It costs fees stacked on fees. It relies on outdated correspondent banking systems that literally route money through chains of intermediaries. The financial world knows this model is collapsing. Banks know. Central banks know. The IMF knows. And Ripple has been in those rooms for years, building corridors across Asia, the Middle East, Europe, Latin America, quietly, consistently, without hype. This is why the idea that XRP is stuck or dead is laughable. XRP isn't trying to win retail. It's waiting for the system to transition to real-time settlement rails. That transition is already underway. The moment these banking networks, CBDC pilots, and tokenized asset platforms are switched on at scale, they will require liquidity. Not theoretical liquidity, not memecoin liquidity, deep instant settlement liquidity. That's XRP's entire reason for existing. Now combine that with the supply dynamic. Once escrow supply becomes thin, and it will, institutions will have to purchase from the open market. They will be competing against regular holders. Retail will not be selling cheap. Early adopters are not letting go at 60 cents, or $3, or even $20. When institutional capital meets a supply wall, the only way equilibrium is restored is through rapid price repricing. The price doesn't climb its way up. It jumps to where liquidity can function at scale. That means $50, $100, $150. Not as hype targets, but as operational requirements. Because if XRP is handling billion-dollar corridors, the token price cannot remain low. A high price is not a dream. It's a structural necessity. And for the first time, the timing is aligning. ETF infrastructure, shrinking escrow, global settlement rails, banking corridors going live, the multiplier effect proven in real time. This isn't speculation anymore. This is pressure building, pressure that will not release slowly, pressure that will break upward in one violent, decisive move. And when it happens, most people won't have time to think, only time to watch. So here's the truth that most people still haven't realized. This entire market is not about price yet. It's about positioning. It's about who understands what's coming before it becomes impossible to ignore. The people who wait for the headlines, the ETFs, the mainstream celebration, They're the same people who will look back and say, I should have seen it. But you, me, and everyone actually paying attention to the mechanics, we already know what this is. Because XRP is not moving slowly. It's coiling. Pressure building in silence is always misread as stagnation. Every consolidation phase in financial history looks boring, right up until the exact second it doesn't. And when the ignition point hits, there's no signal, no announcement, no clean on-ramp for the late crowd. One day the chart looks flat. The next day it gaps so fast that anyone trying to buy the breakout gets left staring at a price level they emotionally can't touch anymore. That's how wealth transfers happen. Quietly, then all at once. And the craziest part? Most people holding XRP don't even realize how early they are. 2 million holders in a world of 8 billion people is microscopic. When the flows shift, when ETFs activate, when banks are no longer testing pilots but actually routing volume through XRP corridors, the world is going to wake up all at once. Not gradually, not gently. It will be a moment, a snap, where the narrative flips from XRP is a maybe to XRP is essential infrastructure. And from that moment forward, the price won't be about speculation. It will be about function, about liquidity depth, about settlement velocity. High price won't be hype, it'll be required. So here's what I'll leave you with. Do not underestimate how fast this can happen. Do not assume there will be a warning. Do not assume you'll get a second chance. We are not here for small moves. We are here for revaluation. The kind that doesn't just change charts, it changes lives. If you feel that in your chest right now, that's not hype. That's recognition. If you're with me on this, if you see what's coming, comment the word velocity down below so I know who's locked in. Hit like, drop your comment, and subscribe to Matrix Millionaire so this message gets in front of the people who need to hear it before it's too late. We're early, we're prepared, and we are not moving.